I have a question for you. Are you ready for 112 different dividend cash cows? Now, you might be wondering, before I answer that, Kenny, what the heck is a dividend stock cash cow? What type of metrics are you using to present to us in this specific video? Well, I'll tell you what, a dividend stock cash cow is any stock that continually increases their dividend payouts to shareholders, you and I, no matter the economic climate. Tech bubble, these stocks don't care. They're like the honey badger, 2008. These stocks don't care. They're continually paying their shareholders more and more and more. Now, some of you might also be saying, if you've seen my videos, Kenny, you've mentioned Noble, you've gone over Noble, you've gone over the dividend aristocrats. This is a whole new video, bitch. As usual, we're going to run this exchange traded fund through my screener. We're going to look at diversification. We're going to look at expense ratio, total return, dividend yield. We're going to look at the worst and best performance time periods, both 3-month and 1 year. Also, what type of Kenny Robinson video would it be if we didn't throw it up against Noble? So get your boxing gloves on and let's get to work.
These stocks have made many millions of people rich, and they're going to do it again.
So before we get started, I want to say thank you, Jonathan, for that super chat this morning on the live stream. I really appreciate that. Now, this video, again, we're talking about the SPDR ETF, ticker SDY. This benchmark that this ETF tracks is the highest dividend yielding S&P Composite 1500 index constituents. So what that means is, the reason why this is different from Noble is, Noble, ticker NOBL, is the S&P 500 dividend aristocrats. This is the total S&P composite index, meaning mid cap, right? S&P 400, welcome to the party. Small cap, S&P 600, park around back. All right, and we've made it into the screener. So before we throw it up against Noble and get the boxing gloves on, I would like to just take a look at this overall ETF separately. So let's type in the ticker here. It is the SPDR S&P 500 dividend, not S&P 500, just the SPDR S&P dividend ETF. And let's throw $1,000 at this son of a bee and let's check it out. So right off the bat, let's take a look at the expense ratio. Expense ratio is 35 basis points, or meaning 0.35%, so about 1/3 of 1% per year, which is actually pretty reasonable. Of course, Vanguard and iShares, they're always cheaper, but they don't have this option. Now, what I want to take a look at is, gosh, look at that performance. This is total return, right? Total return, trailing total returns. 10-year, 13.69%. That's crazy. Let's take a look at the equity style box. Okay, so when we look at these screeners, what we're looking for is, now what you'll notice, and actually we should put it up against Noble before I explain this, but this just shows you the different types of large, mid-cap, and small stocks, mostly value. A little bit of a blend though, but you're still getting some growth. This is why this is such a cool ETF. Now, I want to go down here. Let's take a look at the sector diversification. Does it have real estate? It does have real estate. Not a lot of these dividend ones do. This has 7.3% real estate, which is refreshing. If you guys remember my last video like this, neither ETF had real estate, so that's really, really nice. Now, what I want to do, let's see, let's look at the best and worst return periods. Okay, gosh, that's crazy. Since 2005, had a little bit of a dip, of course, in 2007. Nuts, okay. All right, so here's the best time periods of this. The best time period is 28.18%, March 2009 to May 2009. The 1-year best is 61%, March 2009, February 2010, buy at the bottom. Worst time periods, okay, so here's what's really cool is 38%, that's less than the broad S&P, 25% less than the broad S&P during these same time periods. So that's really nice, is it's a little bit more defensive. So with that being said, let's take a look at, let's just get Noble in here. Let's put Noble into the fight as portfolio B and OBL. And I believe it has the same expense ratio. All right, generate analysis. And we'll go back to the overview and we'll just put these suckers head to head. Now, obviously the biggest difference is the Noble is again only the S&P 500, where SDY is the S&P composite, meaning small, medium, and large size companies. Also, that's why SDY has twice as many holdings, has about 112, whereas Noble has just over 50. So same expense ratio. This has a higher yield as well. Is more stocks the answer? Is this better than Noble? Let's check it out. Let's create a hypothetical. Let's put them up head to head. Make sure we put it, let's see, view and edit all. Okay, earliest in common, let's see, 13, 10, 9, 13. We want to do custom. 9, 2013. All the way, let's do 8, 12. And we're going to reinvest all dividends, all capital gains. Put them up head to head since Noble has been released. Wow, look at how nicely those track. Again, because Noble, all the stocks in Noble are in SDY. It's just SDY has extra ones because they have all the market caps, which is really cool. Plus, you only have to increase your dividend 20 years to be in SDY, whereas stocks have to increase their dividends 25 years consecutively to be in Noble. Cumulative return on Noble, 92%, or 92.14, let's be very specific here, and 92.69. Average annualized return, this is total return, dividends reinvested, 11.95 and 11.89. These are so close. Oh my gosh. Final market value, $1,926.90, $1,921.40. We're talking, okay, let's get out the calculator here. So we have, which is the higher one? 1926.90, 1926.90, all right? Subtract 1921.40, 1921.40. We're talking $5.50. You can't even buy a 10-piece nugget meal at McDonald's for $5.50. So if you've owned these ETFs over the past 2013, October, let's see, carry the 2, that is almost 6 years. It does not really make too big of a difference. But let's check out some other metrics. Let's look at the beta. So beta is about 0.83, 0.83, doesn't really change much. This is a little, so Noble's a little bit more volatile. 5-year alpha on that, about the same. Holy crap, about the same R squared. Oh, that's not going to be the same because this has been around longer. Okay, let's check out some more. X-ray. See, here we go. Number of stocks, 112, and there's only 57 in Noble. Now let's take a look at the sector diversification. This is another interesting one. Okay, so SDY has a little bit more communications, a little bit more energy, not as much industrials, okay? Has some tech in there. I like that. Finally, some dividend-focused fund with tech, which is nice. Zero tech in Noble. Very little real estate in Noble. Come on now. It's getting some black eyes over here. Real estate, like we said, 7.3, okay? Basic materials in there, pretty healthy across here. And it's healthy in utilities. SDY. I want to buy you. I think I'm going to buy you. All right. I've decided. Now let's take a look at the top 10 holdings. AT&T, P&G, AbbVie, okay, so there's AT&T in the top holdings. Is Sherwin over here? No, not in the top 10. We have Sherwin, Cardinal, nope. Ecolab, nope. Air Products, watch, I'm going to miss one. Hormel, Archer Daniels, come on now. No? Oh, there's Cardinal, see? Let's see, People's United, I own that. Chubb, big insurance company. Gosh, not a lot of the same stocks in the top either, although about the same percentage of holdings, right? Just a little bit over 1. Some of these are bigger, 2.48, 2.25. All right, I'm digging it. So after going through the analysis, I really like that SDY has both healthy representations of tech and real estate. It also has a little bit better yield, although I'm not big on yield as a percentage. Has the same expense ratio. It's been around since 2005, so we can look at its performance through the financial crisis of 2008. It has a more diverse market cap, and gosh, look at those 10-year numbers, which Noble doesn't have yet. We look at the 5-year, gosh, it's just neck and neck. It's amazing. Here are the different style boxes, the equity style. Look at that. So mostly large, a little bit of mid, whereas this has large, mid, and small in that as well. So I'm really liking SDY, And I've pretty much decided as of this video, this is the first time I've ran it through the screener, I am going to buy this ETF. I like it. I'm fine with the 35 basis point expense ratio. Again, I like the tech representation. I like the real estate representation, both places where Noble is weak. Also, again, I love that track record. So this is going to be the newest addition to my dividend portfolio. If you guys like this video, first of all, hit that like button. Let myself and YouTube know. Also, hit that subscribe button if you haven't. And of course, let me know in the comment section down below which ETFs or which stocks I should run through this screener, and we'll do that in the next upcoming few videos. So thank you so much for watching, and we'll see you guys next video.